Hey traders, Jason here from Leavitt Brothers. Happy Sunday. Last Monday I somewhat raised the caution flag that there were some warnings that needed to be either negated or else the market would correct again. In this video I'm going to do an update of those charts. Okay, let's see what's going on. Alright, so here is the Dow down below and the S&P up top. As you can see, okay, the Dow over here got rejected by its previous high, so did the S&P. Then the Dow could not eclipse its previous high, and the S&P was able to overcome it. Okay, so this gives us a negative divergence. We got a higher high here from the S&P, lower high from the Dow. Historically, these two are 95% correlated, so it's pretty much impossible for them to move in different directions for long. Eventually that has to give way. Both I would consider to be doing okay in the near term still. Okay, both are above their uptrending 50-day moving averages, but in the near term, you know, with the negative divergence, I think we got to be a little bit more cautious. Okay, again, they're very correlated. They cannot move long in opposite directions. So something has to give here, and as of Friday, it looks like the Dow is going to win this battle, at least in the near term. Okay, here are the S&P, not the S&P, here's the Russell 2000 small caps is up top, the S&P 400 mid caps down below. As you can see, the Russell got rejected by its high, then it put in a lower high and then a lower low, and it took out its 50. The mid caps took out its high briefly, then dropped, put in a negative divergence, and then dropped again and closed below its 50. So where the S&P made a higher high, whoops, wrong indicator. So where the S&P made a higher high, these two also made lower highs. Okay, so higher high for the S&P, lower high for the Dow, for the small caps, and for the mid caps. Okay, something's got to give. The S&P is not going to keep pressing up if all these other indexes are moving down. Okay, if you look backwards, you can say, hey, we're just in a big basing pattern. Okay, for both of them, you could say that. And in fact, I could highlight this side of the base, this side of the base, type thing. Okay, so I would consider it neutral. Okay, the market moved up and down, then it fell hard, then it rallied hard, and now it's moving up and down again. So overall, I'd say that's neutral. Don't get overly bullish, don't get overly bearish. That's the situation right now. Okay, the S&P tried to push higher in the face of this, and it just wasn't going to go. Okay, now let's look at some of the indicators. Okay, here is the S&P 500. In the middle, we have the 10-day moving average of the advanced decline line. Down below is the advanced decline line. Okay, so as you can see, advanced decline line, higher highs, higher lows above the uptrending 50. This is exactly what you want to see. If you look back to May, June, July, all the way over the summer, you have a higher highs, higher lows above the 50, and the market did the exact same thing. Okay, so per the long-term indicator, which I consider the bottom here to be a long-term indicator, things are in good shape. Closer, near term, we still have a negative divergence in place. Okay, lower highs, lower lows, indicators trending down, tells us in the short term less stocks are participating. Each move up here, up, down, up, we're getting participation and then less participation. Okay, so near term warning, overall good shape for the NYSE. Here's the Nasdaq version of the same line. We don't quite have the same situation. For the 10-day, we have the same thing going on. We have move up, move down, move up to a higher high, but the 10-day is up, down, and a lower high. So on this thrust up here, we have advanced decline line at a lower rate, lower level. Okay, so advancers are beating decliners, but by a smaller margin. Okay, but we have a divergence with the cumulative version of the line. Okay, overall it's doing fine. It's above its 50. Its 50 is trending up. We have not come close to the highs over here. There's a gap between the current level and the highs. But in the near term, it's notable that we put in a lower high. Okay, it's somewhat similar to what happened over here. Okay, market moved up, lower highs from the 80 line. What happened? The market fell, came back up, moved sideways for a couple weeks, and then it moved up again. Okay, so it's something to watch in the near term. Okay, look, I mean, the Nasdaq's done really well. I mean, you look at, I mean, it's actually the strongest index, and yet the AD line put in a lower high. It's very notable. It's not something we should ignore in the near term. Looking beneath the surface, here is the AD line of large caps, mid caps, small caps. So as the large cap AD line put in a higher high, the mid cap version put in a lower high, the small cap version put in a lower high. Okay, not a surprise, the S&P 500's at a higher, moved to a higher high, but the mid caps and small caps did not. Okay, this divergence appeared in September. Okay, higher high for the large cap. The mid cap one also did a higher high, but as a warning, the small cap put in a lower high. Okay, so it's definitely a warning when the mid cap line moves down. Okay, does it mean the market's going to crash or do something like that? No, not necessarily. It doesn't have to. The market could just cycle down, rest, build another base, and then move up again. But in the near term, when you get something like this, you have to be a little bit more selective with how you play, and you certainly can't give stocks a whole lot of room to move against you before you decide to get rid of them. Okay, here's NYSE new highs and new lows. Okay, they look to be in very good shape. When the market trends up, you get new highs that oscillate at a decent level, and that's exactly what's happening here. I don't see any warnings here. Per this indicator, the market is in good shape. New lows are at a low level, new highs are at a decent level. Everything's good here. Same indicator with the Nasdaq, different story. Okay, even though the Nasdaq has been going up, 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 and it's been one of the strongest indicators, we haven't gotten new highs to print at like a higher level. If you can pause the video and see every time the market rallied, you got higher prints here, and it just hasn't happened. It just hasn't happened at all. And then last week we got a divergence. Market moved up, new highs, lower high. Okay, so overall, not great because we're not getting a lot of new highs, and then in the near term, not great because less stocks made new highs on this last thrust up than they did at the beginning of the month and at the end of February. Looking beneath the surface, here are new highs among large caps, mid caps, small caps. Okay, large caps, good shape. Okay, they've held up well. Mid caps, not bad either. They've also held up well. Okay, unlike last September where you got the market going up and large cap new highs dropping, mid cap new highs dropping fast. Okay, but right now both of them have held up, but small caps have obviously moved down. Okay, we got nice prints toward towards the end of February, and then they just fell off, and they have not moved up at all since. Somewhat reminiscent of last February when they trended down. Okay, this is definitely a warning. The market could resist this type of internal pull for a little while, but it can't resist for too long. We're going to need the small caps to participate at some point in time. Okay, if they don't, then what happened Friday is going to happen more often, and what happened Friday is going to happen for an entire week or 2 weeks, not just a day. Okay, couple more charts here. S&P 500 up top. Down below is the percentage of S&P stocks at above their 20-day moving average. Okay, what we want to see, characteristic of a strong market, a strong characteristic of a healthy market, is you get these oscillations above 50%. That's good. Okay, notice what happened here. This is like ideal situation. You get oscillations above 50%. Occasionally you get a dip below, but for the most part you get oscillations above 50%. And that's characteristic of a strong market. The market trends up. Okay, we've been getting that for the last, almost 3 months. So good, good for that. But we obviously have a divergence in place. The market pushed up here, but then the percentage of stocks above their 20-day EMAs, fell. Okay, so that's a little bit of a warning. When the market was here, you had like 90% of stocks above their 20-day EMA. Then the market dipped and then recovered, and not just recovered, but recovered all the way to a higher high. And yet, instead of 90% of stocks above this moving average, you only have 75. So 15% less stocks, 15% of the S&P 500 is 75 stocks. So 75 less stocks are above their 20-day moving average relative to the previous rally time. Okay, so that's a little bit of a warning. Then the picture here overall is good, but the difference between February and March is notable. Okay. Next chart. Same exact situation with the percentage of stocks above their 50-day moving average. Okay, we got higher high here, lower high here. Okay, right here, 90% of stocks above their 50, and then yet right over here, just a couple days ago, it was like 75, and as of the close on Friday, it's down into the mid 60s. Okay, so we got negative divergence, less stocks participating, less stocks above this key moving average. Okay, so last week we got some warnings, and this week I'd say the warnings have intensified. If you're a shorter term trader, even an intermediate term trader, you got to play it safe. Okay, I always like to say that the key to making it in this industry is you got to make as much as you can when trading is easy, so you can sit tight and do very little or nothing when trading is hard. I could turn that around and say the key to trading is to lose as little as possible when trading is hard, so that you're mental and emotionally like ready to flip the switch and get aggressive when trading gets easier. Right now trading is hard. Be careful. Get ready to go long, but have patience. The goal right now is to lose as little as you can and to keep your head on straight so that when things improve, you're ready to go. Thanks for listening, and I'll see you next time.